White House imposes 50% tariffs on Canadian goods amid escalating trade dispute. Washington. In a major escalation of international trade relations, the White House has announced sweeping new tariffs on Canadian goods, imposing duties as high as 50% on key imports. The decision, which targets critical sectors including dairy, automotives, aluminum, and agricultural products, has sent shockwaves through North American financial markets and heightened economic tension between the neighboring nations. The announcement comes as the administration doubles down on its America First trade stance, citing long-standing disputes over market access and regulatory practices. Key highlights of the executive actions. According to official White House fact sheets and proclamations, the new tariff structure affects several major industries. Dairy and agriculture. Higher duties designed to counter what the administration describes as unfair barriers against American farmers. Automotive sector. New surcharges placed on Canadian manufactured vehicles and auto components imported into the United States. Raw materials. Adjustments strengthening existing duties on aluminum and steel imports to protect domestic manufacturers. White House officials contend that the measures are necessary to level the playing field for American workers and combat unfair foreign trade practices. The rationale behind the move. In statements released by the executive branch, the administration emphasized that Canadian trade policies have placed American industries at a distinct disadvantage. Officials pointed to dairy supply controls, automotive trade disparities, and retaliatory measures from previous trade disputes as primary drivers for the aggressive stance. We are taking decisive action to hold foreign trading partners accountable and protect hard-working American families, manufacturers, and farmers, the White House statement read. Economic policy advisors noted that while tariffs remain controversial, the administration views them as an essential lever for securing fairer bilateral agreements. Canada's response and international reaction. Reaction from Ottawa was swift. Canadian government officials expressed disappointment over the sudden announcement, emphasizing that Canada remains open to constructive trade negotiations but will act to safeguard its domestic economy. Canadian industry leaders warned that sharp tariff hikes could disrupt cross-border supply chains that have taken decades to integrate, potentially raising costs for businesses on both sides of the border. International trade analysts also cautioned that retaliatory measures could soon follow, creating ripple effects across global stock exchanges. What it means for consumers and the economy. For everyday Americans, economic experts predict mixed short-term and long-term outcomes. Potential price increases. Consumer items relying on Canadian raw materials or agricultural products could see price bumps in retail markets. Supply chain friction. Automotive assembly lines that rely on parts crossing the U.S.-Canada border multiple times may face temporary delays. Domestic manufacturing boost. Supporters argue the tariffs will incentivize companies to shift production and sourcing back to the United States. As market analysts digest the news, eyes remain fixed in Washington and Ottawa to see whether diplomatic discussions will mitigate the tariff enforcement or lead to further trade escalation.